What's up, guys? What's going on? How's everybody doing? Welcome, welcome, welcome. You guys can hear me all right? Wow, there's like nobody in the stream. Good, everybody's enjoying their Saturday. Everybody is hopefully enjoying their Saturday. Okay, what's going on, guys? What's going on? Just give me a sound check real quick. Then we'll get it started. Not going to do a long stream because I have to go to a barbecue and then get ready for vacation. So try to keep this short. Cool, cool, cool. So everyone can hear me? Sup, bruv? Yes, sir. Okay. All right, guys. So what's going on? For those of you that are new, it looks like there's barely anybody here. Welcome to the BlockRoots YouTube. My name is Ryan, also known as Cantor and Clark. On behalf of myself and my partner, Josh Rager, I want to thank you guys for stopping by. Josh already left for vacation. I am leaving for a vacation tomorrow. Got a vacation house right on the water on the beach, and I will be getting plenty of sun, but I will absolutely still be plugged in, unfortunately, because it's very difficult to leave this market. There are no exits. There are only entries. All right, but if you're not a subscriber to the YouTube, make sure you hit the subscribe button, hit the like button, you know, all that good stuff. Just as a heads up from the get-go, as a reminder, none of this is financial advice. This is strictly for entertainment purposes only. All right, so just my opinion, and that's really it. I am a full-time trader. Josh is a full-time trader. So we just provide color right? We just give our opinions, how we're seeing the market, how we're trading the market, and that's really it. Don't follow us. We don't have a 100% hit rate. So again, you're at your own risk. Also, this stream is sponsored by Phemex. So Phemex, they are our partners. They offer spot, contract, and a yield generating program. So right now it's up to, I think, $1.5 million in USDT, and you could gain anywhere from 7 to 10% interest on top of that, which is pretty incredible. Just as a intro in the beginning, because it's still relevant as we're talking about them, they are hosting another competition. So this will be a trading competition, trading BTC, right? So BTC contracts, and I've actually gone ahead and set up a team. So, we do this every time. I was up, up 60% last competition, then I YOLO'd, and pretty sure I just liquidated the account. But that's what these competitions are for. They're really just for fun. If you want to join our team, it's called the Horse Stable. Yeah, I don't call the team BlockRoots. I'm always constantly changing the name of the team. So this this competition, our team is going to be called the Horse Stable. How appropriate, right? So if you use the link Phemex.trade, it's in the description of the YouTube below, or the little summary that they have. You can gain access to, I believe right now it's a trading bonus. So yeah, that's always nice. All right, so we're going to talk about BTC, we're going to talk about ETH, and then we'll probably just wrap it up pretty quickly. Take questions, obviously. How's everybody feeling right now? What is the, what do we feel like is taking place? We think this is bullish. We think we're visiting the highs. What are we doing? Going to the highs, going to the low. We bullish, we bearish. Give me some input. Let's hear it. Bullish, bearish, neutral. I mean, I have my opinions, right? Come on, bulls. Okay, might be a little bit of a lag. All right, so still stuck within this range, right? We've been in this range now going on to the middle of, when was the last leg of this dump? The last major day of this dump was the 19th of May. So we're going on almost a month in the range, right? 3 weeks in the range. It is, I don't want to say it looks weak. I don't want to say it looks strong. There are some things to point out. One of them is that Michael Saylor likely has not purchased his Bitcoin yet. I don't think that it's possible for him to begin to purchase unless he procured it in some other way, maybe the form of a loan, till the 14th. Okay. We are still within a range, though. I mean, if we look at this structure on the higher time frame, I'll go to a different chart really quick so I don't have to change around any of those drawings. We'll take these spaceman levels off. Very helpful. Still within this weekly range, though, right? We had, an inside week setup. So an inside week setup meaning we closed within a prior week's range, right? And that setup means that you often get a play from a weekly low or a weekly high to the prior week's high or prior week's low. So it offers you a quick play. What this does is basically just indicates that the market is in pretty much relative balance, right? So we have inside weeks. So we have 1 week inside of the prior, and it sets up for a break from balance situation. Now, if we look at this on the TPO chart, I think it becomes a little bit more clear. So this is the last 4 weeks TPOs. You can see you have this strong trending TPO, right? That was the dump. So we have a period of balance, right? Strong move down, period of relative balance. I wouldn't say it's really balanced at all. Another strong move down. And then we start coming into these more balanced profiles, right? So after a big liquidation type structure like this, more often than not, whether it's on the daily or the lower time frame, you're going to have a period, or rather the following sessions will likely become more balanced after that, right? It's just the concept of going from trending, right, something like this, to a more balanced consolidation before you are either going to reverse or continue trending in that direction. So this, I think, paints a pretty clear picture if we look at just how the last couple of weeks have sort of painted, When I say painted, I just mean how they really just took place on the chart. It's just I don't know. It's an old word that I'm used to using. So we looked at the last 3 weeks, and we could see that the majority of our time was spent between, under 40K, right? Just under 40K. So we're looking at really, 2 weeks ago, the high of around, what was that? That was around 4,500. Not 4,500, but 40,500. And then the value area low of around 35. All right. So if I compress all of these, gives you a better idea. So this is the last 4 weeks. And again, you're seeing where most of the distribution took place. Right. And for this stream, I've actually made it so I could draw on everything. So I have multiple displays linked up and won't have any drawing issues. And I put the exo charts on the center as well, so we don't have to worry about losing any of the when I'm describing anything and highlighting it. All right, so the last 4 weeks, you can see that towards as we've moved from left to right, we've came into a more balanced type of behavior. The thing that you want to see, obviously, we do have a series of lower lows, right? Lower highs, lower lows, lower high, right? What I want to see regardless is if this is our balanced range that we're forming, right? And when you go from high volatility to low volatility, you go from expansion to compression, the tighter you become, the more likely you are at each break of any kind of previous high or low to lead to another expansion. All right, so the best case that I could make for the bulls is obviously really local, because this more recent high is right around 37, 38. I think it looks really good regardless on the high time frame if we could maintain this point of control, right? So this white line that you see moving across, this is if we took the last 3 weeks and compressed them, this is where we spent the most amount of time. So, it's more or less the middle of the range, right? If you look at where all like the pivots are, right here, 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 right? A lot of time in this area, a lot of pivoting between here, spent a good portion of this structure in the last 2 days over here. So the more that we favor the top side of this, the more likely, obviously, that we're going to set up and move back up to 40K, right? This, again, where most of the activity has taken place, extending this forward, right? If we look at the volume profile for this, so I'll just go to TV real quick, and we'll put the volume profile on. So fixed range. All right, so you see the volume point of control is at 36.9 and the TPO point of control is at 36.7. So those two are kind of lock in step, which is really good. What you wouldn't want is, your volume profile point of control being like somewhere up here and your TPO point of control being somewhere down here, meaning most of the volume was transacted at the highs and we're still stuck all the way down here. It just sets up a situation where, longs are clearly not in a really good position if you're trading below where most of the activity came into the market, right? If you're going to make a case for one side being in more pain than the other, it would be longs in that case. So it's really good right now that, our TPO point of control and our volume point of control are kind of in the same area, right? So what was that, 36.6? So it's really in the same exact spot pretty much. So when you have a structure building like this, where you have a range being established, the more that you spend above, right? And this is what usually happens. I'll open this. Right, you see what happened over time. Here is your TPO point of control for the first week, second, right, third building a little lower, and now starting to again build slightly higher than the prior week. The best case scenario is if this volume point of control, which is these are the TPOs, but the volume points of control for the last 3 weeks have been basically following the TPO point of control lock in step. The best case is that, if you have a high volume splash like this, you might have one day that follows where after the splash, or the 1 week that follows where you'll have the bounce, right? Sort of a mean reversion type of behavior, and the point of control will be built at the high, right? You're not going to expect it to reverse, almost immediately like a V-shaped reversal. So the point of control will be established higher, price will come back down favoring the lows, right? Point of control will start to get built lower. And ideally what happens over time is this point of control, this POC, shifts lower and price is able to trade above it, right? Because if you think about it, what it would mean is that over the last 3 weeks, a lot of volume has been transacted at the lows, but price is now maintaining it. And that makes a good case for, shorts being trapped at the lows, right? Longs being in better position and all of that. So that's what we're kind of getting close to right now. Again, if we just leave this week out, right? Point of control is slightly below us for the 3 weeks prior. Okay, so that's starting to make this look a little bit more attractive, right? You took out this lows. Line chart is very helpful, right? On a closing basis, okay? Took out that low. Now if we're able to, again, trade above, and I think that the best area now would be 37, right? If we combine these one more time. So there's that point of control. It's at 36.7. If we're able to build a base, and I'm including the point of control to give you an idea of sort of what has taken place over the last couple weeks, but now it's really, if after this high right here, if we're going to make a case for this being, right, a series of lower highs on the way down. One sec. Just going to get better at, right, lower high, and then lower high. Well, then maybe things will change contextually if we could build, whoa, that's not the ink we want to use, the stroke size. If we're starting to trade back above one of these highs, well, that might be the first time that we actually have done that, right? And I don't mean might be, it actually would be. Unless you go back here and include that. But really, it's much different, I think. There's a stronger case for it after you've built the range for, again, we're going on a couple weeks now, right? So, again, these are just the weekly TPOs, right? Now, if we're able to even get above a local high, and it's easy to say that, right? Like, I could have said that the entire time. We could have said that this week too. Here's your recent turn, right? If we're over, we're kind of like in this position right now over here, and we're saying the same thing back then. All right, if we could just build above this high, right? If we could just build above this high. But that's how market structure governs progress, obviously, right? It's the lack of progress afterward. So that's the level right now, though. So 36,700. Being back above this week's point of control, being above this entire structure's point of control in the higher time frame, I think that we're, I'm still biased to the upside. I still think that we're going to be coming and testing at least 40K. I don't think that this is the last test of 40K back here. All right. Get rid of this real quick. Stuck in some drawing tools. Okay. So this, what I was just on right here, this is Quant Tower. Okay. This lower left-hand corner of the chart that you're looking at on the screen, this is the ladders that I've set up. So what you can see is that, so here's Phemex. I'm taking a look at Sol. We'll go over why, and again, the link for Phemex is below. I'll go over in a second why I'm looking at Sol now, even though it's shorting up at the highs, just for a short-term play. But these ladders below, they're connected to one of my trading accounts. So you can see that on this screen, we're looking at, I'm trying to keep it centered. I don't have any positions open right now. We are looking at Bybit. So as I've said, I trade on multiple exchanges. And this ladder, what you'll see is we'll just get long one contract. So now we're long. And I could go ahead and right away I could set, stop losses. So put a stop right here. Okay. Put a stop below that, right? You see how I'm just clicking on the ladder to add these positions. And then they're linked right up to the exchange. So then I can just flatten it right from here and exit everything. And I'm doing most of my trading when I'm scalping from the ladder. That's why I was tough for about a week, going back to trading right off of the exchange interface, which is not really desirable when you have access to a ladder. All right, so again, as far as the higher time frame goes, we're still stuck back within a prior week's range, right? Or this is a multi-week range. Okay, so still stuck back within that structure. The levels, as I said, they're getting lower now because to invalidate this series of lower highs and lower lows, Now we just need to trade. I think, trading above 36.7 is adequate because that puts us above, this multi-week point of control. That puts us above where bulk of the activity came in this week. And we're back within essentially a daily lower time frame range, right? Just back within these lows. So something like that. The last couple of days leading up, so the move off of the low, we had that big increase in stablecoin open interest. A lot of people trading stablecoins right now. It's not really a good idea to hold any kind of positions in coin margin contracts, especially if you're still anticipating a breakdown, if you're long, especially because that convexity. But we're starting to see, again, negative funding, right? Negative predictive funding. These are the signs that you would want to see during a range, right? If you're going to make a case for higher prices, period, right? We don't want to see that as prices ranging, like the longs are getting aggressive on derivative platforms. And we're back at, we're back trading with a premium between Coinbase, FTX spot, and the perps. So actually Bitfinex is trading higher than everybody right now, which is funny because Bitfinex has all those open shorts that everyone is referencing. Bitfinex, I hope I said Bitfinex instead of BitMEX. Bitfinex was trading at like $100 discount to Coinbase a couple days ago. So it looks like that has pretty much completely subsided, now trading at a premium. But most importantly, at the lows, right, we have this spot premium showing up again. If we look at funding across the board, we'll go to, there's a good site called, it's actually, looks like Bybit, BYBT. Just look at the fundings across the board, negative funding across the board, right? If you look at just futures term structure as well. So if we were to look at something like, we'll go to Bitcoin futures, and really just making a case for this being what I think is going to be a temporary bottom that we put in before we actually move up to higher prices. I don't mean all-time high prices. I mean we catch a little bit more relief than we've had within this range. But if we look at just futures contracts on, we could look at BitMEX, for example. September's only trading at 6% above. If we look at OKX, we're looking at trading at only a 2.3% premium. Go further out all the way to December, 4.5%. Binance, September, trading 2% above. Bybit, not important. FTX, December contracts trading 3.8% above, right? So these are all really flat, which is how, and it's not backwardated right now, but backwardated would be something like, I think the CME, part of it might be kinked and somewhat backwardated, but not completely backwardated. It's actually not anymore. So recently, I think it was in the last 24 to 48 hours, the CME contracts were backwardated, meaning that, and it looked more like this. It was like the spot price, of Bitcoin was up here and CME did this, right? So those forward contracts were trading below or at a discount to current spot prices. And again, like I said, this really just gives you an indication of what the sentiment is, because you have people essentially selling the futures contracts, meaning they're not anticipating higher prices for those expirations, right? If anything, those are good contracts to buy when they fall below the spot price. You could look at something like skew as well. And really, I'm just building a case for why I think that this is going to be a temporary bottom we put in. It's violent. It's not really violent, but it's choppy. It never looks as pretty as you want it if you're hoping that it's a bottom. But then you eventually get that one move that rips through all the upper levels, and it's like, oh, yeah, of course that was a bottom. The squeeze takes place in a matter of minutes, though. If we look at just term structure with option skew, we're looking at 10-day, 7-day, 30-day, 60, 90, 180. I like to put 120 on this too. You could see that throughout the entirety of this range, and really what we're looking at is all the way to the 21st. So right here, not only was short-term skew, so 7-day, extremely negative, meaning the puts were trading at a much higher premium compared to the calls. All right, implied volatility much higher for puts than calls. Right, there was a lot of downside protection bought. Right, this is a lot of just pessimistic behavior. Not only was it short term, which you see kind of fluctuate at local bottoms, more recent moves, doesn't really mean much for long term, but the long term skew also, which is something that we don't really see with BTC because it usually stays just positive. Long term skew also dipped in negative territory. Right, so hopefully you could see the ink when I'm drawing. Otherwise, I'll just make this slightly larger. One sec. Okay, so long-term skew 120, right? 180, also in negative territory. So this is not really something that we've seen for a really long time, and that's just way further out, right? The expectations that prices would be lower or that you need to buy puts is really, again, just an indication of what the sentiment is. So this, along with funding, taking out this low, right? Multiple moves at this low, trading above what is the point of control for, we're not above it right now, but for the last 3 weeks, spending a fair amount of time shifting that point of control lower and maintaining the center of the range. All really good cases to make for this being a bottom that's starting to, that is building, right? That is being established. It doesn't mean that we can't do something like this and rip up. However this eventually makes the final move up is anybody's guess, because again, what I said was going back to, I think that this structure looks similar to these structures, which could imply that you have one more roll before a massive squeeze upward. Now this is the she candle, but still long-term range. You get that final move into the low that turns to the rip and reversal. And we see this with BTC all the time. When a range is being established and you're thinking that it's going to do something like, we're thinking that the bottom is going to form something like this. Maybe it suddenly starts making higher lows and just turns from there. In our experience, it seems more often that Bitcoin likes to do something, right, where it looks like it's finally really bouncing out, giving you some clear levels, rips down, catches a bunch of people off sides here, and then finally puts in a move that doesn't really give you much time to get into, right? Versus sort of thinking that you're going to get this play where, you have a really obvious high, and now you just need to see the price is finding support above there, and then it's, an easy long from there. More often than not, when you see the easy setup play out like that, what does this turn into? This turns into like a deviation, and then we end up breaking down, okay? Not to say that it needs to occur like that, but that's one thing that we've seen many times before. This market likes to capture a lot of people off sides and use that as, essentially that gets used as fuel in the opposite direction. So that is something always to be mindful of. That's why I think that I would only, that's why I've sort of made a clear case for I only want to get involved at the lows, or only want to get involved when we've clearly established presence above the highs on the higher time frame. Meaning I'm not going to get into a long if we've closed a 15-minute candle above these highs, right? What else was I getting on? All right, so just a case to be made for a bottom being built, right? So expectations, right, being very poor, basis being very, at this point, very compressed, the point of control drifting lower, and us starting to, again, trade what looks like we're going to be, one sec, starting to overtake that. This is the last 3 weeks. This is the last 4 weeks. And it's just, and I hate to say it like that because it's $300 away. It's, $1,300 above us, but trading above that makes it look really attractive. Another thing to point out, just get rid of some of these drawings, put on our 20. So this is the EMA. It's a bit faster moving. Gives you the same idea though. All right, we'll put on the MA, which probably is more or less the same, but maybe not as sloped down right now. Right, so you can see we're We closed above the MA, but we're having trouble with the EMA. Now, these are not really things that I'm going to be sort of leaning on, but I do like to know where we sit in relation to this, because this is frequently going to be used as dynamic support or resistance, or what a lot of traders are defining their bias off of. And, it still just paints the same picture of, hey, now this is, this MA is at 36,700, right? So it's like in the same exact area where a bunch of other levels of confluence are, but it makes the case much stronger at this point for a lot of different people. And that's really what you want to do, right? You want to have multiple pieces of confluence that, traders from all walks are going to be relying on, so that you can have that much more participation get behind the move, right? So that 20 EMA, that 20 MA, now we're trading back below them, so acting as dynamic resistance, even if they're not physically acting as resistance, even though what you'll see is that a lot of the times traders will sell this and algos will sell or buy this or begin to shift bias. We are kind of chopping around this, and in a range either way, you're going to see that this meets price regardless, and it's just going to really just going to flatten out. One other thing to focus on in the high time frame, going back to the breakdown, another really important level. It's going to really just line up with a lot of our other areas as well. This is the anchored VWAP from the break in market structure. So right from here, the break of this low. So an anchored VWAP from there, right? Meaning from this break in market structure where all the participants came in, what that volume weighted average price is. Okay. Now, this is a little bit more useful than the point of control. All right. This is where most of the risk has been put on post break, or where you could just say where the a majority of the risk was tagged on, if we consider risk just long and shorts getting in position. So we're below this now, which is not good, right? If you're looking at if you're intraday trading, a lot of people will use a VWAP to really define whether or not they're going to be longing, shorting, looking to see some level of interaction on a return to the VWAP. There's plenty of other people that use VWAPs for different reasons. Portfolio managers will use VWAP. It's a good area for liquidity. But again, this anchored VWAP, I think this might be one of the most important levels, right? If you consider the break in market structure, one of the most defining changes, obviously, that everyone can get behind. Well, if we're back above the anchored VWAP from there, and that's at 37.8, really, what that is again, this whole level right here, and this is why it's sometimes it's really just best to lean on market structure, because our point of control is what we said, 36.7 area, meaning for all the weeks prior, it's lining up here now for this entire composite. All right, so you're above there. What would you rather do in this kind of situation? Would you rather just say, all right, that piece of evidence is good enough, or would you rather want maybe the uppermost? Okay, I think the uppermost is better, and that you're above all of those areas of confluence now, back above a local high, and yes, now you know that this is, this local high also lines up with this anchored VWAP where a majority of the risk was tagged on, and you haven't after, especially, the initial bounce and recovery, it doesn't really mean much, but after you've ranged for some time and you've had more people commit to positions, right? More people commit to the idea of a high or a low break leading to continuation. It just makes any kind of subsequent break of market structure or any of these sort of areas we say risk was tagged on, it makes any one of these much more actionable, right? Or makes them that much more actionable because you know that there's more people behind them, right? That are going to either change their positioning or get behind a new position, right? So the longer that you move within a range, the more likely you are to build up stops at the lows, right? So, if we just consider from, let's say from this bounce to this high, right? You might have people that are shorting from here and their buy stops are above here. You might have people that are longing from here and their long stops are above there. Well, those haven't been interrupted yet. So you could extend those moving forward, all right? Whoever shorted this high, okay, it's very likely that they have also placed their buy stops above there, right? Or their stops to close out. This low also has yet to be really, has that low been interrupted so far? It looks like that might have been on Coinbase. But not, it's not like it was violated much. The idea is that the more that you move left to right and you continue to compress, and that's why, drawing a triangle is helpful in the sense that it shows you that price has been compressing. You're leaving behind clusters of liquidity that have been untapped, right? And not only that, from people that have gotten into position, every time that you move, if you continue to move left to right and you haven't interrupted any of these areas, you have people that are sitting on the sidelines saying, all right, maybe I'll place my buy stops above here to enter, right? I want to be part of a breakout. I want to be part of a breakdown, right? So the longer that you move from left to right, the more substantial this move is likely to be. And that's why, when you form a compression like this, where you do have, lower lows and lower highs and almost higher lows, right? With the exception that this kind of changed this structure within here. These major swing points, if we have them funneling, this is why it's difficult to get into a position unless you're already pre-positioned, because, with all of these stops built up, some new ones up here now, as you can imagine, anything that triggers into this area very quickly is going to trigger into the next clusters, right? This is the same way liquidations work. You go from the pocket of 1% moves that, cause liquidations for your 100 times leverage, your 2% area for your 50 times, and then that just cascades into the next pocket of liquidity. So that's why you see that after something has moved for a really long period of time, it's difficult to get in a position once the move starts, because the move starts and it ends very quickly, right? Does anyone have any questions about this? So I honestly think that, if we just look at how this move has occurred from low to high, where we've kind of settled at. From the low to the high, we've had this 50% retracement. A lot of the times, even within ranges, right, you'll see that a move comes all the way up and comes back down to the 618. So I'm not ruling that out. This kind of calm landing down here, right? And we'll go to my Bybit chart and I'll sort of go over why I was getting long yesterday. I was in and out of multiple scalps in the same pocket. So right in between these red lines, I was in and out of probably about 4 scalps last night that were not just scalps. They were like, I held them for a little while because you had this single print imbalance. So if we extend this forward, this little pocket, a lot of times when you revisit it, you're going to see that price will respond off of it as if it was a support level, okay? And sure enough, we open this up, we see that we had multiple bounces within here, okay? Today's profile is attractive for a pullback, right? A B profile, a profile shaped like this. I like to say B for base. You've probably heard this before. But again, what you're doing is, the idea is, you have a long liquidation type structure, right? Or a very swift move down, one-sided from the open to where we currently are. Create this larger range and then distribute and accumulate a majority of the activity at the lows. But you want to see that you're holding the highs, at least of this value area. Otherwise, I like to say that this is a B for a big belly that's going to puke if you start trading below where most of the activity came in. Just imagine that what you're seeing here, this thick area, is where a lot of people are getting in a position, where a bulk of the activity and participation is taking place. So at least you want to see that you're trading above the point of control. If you're building a base as price is moving down, you should see that, yeah, your point of control will trade lower. If bulls are in control, they'll be able to maintain that level. All right. So, we're trading slightly below the point of control right now from a volume standpoint. So not the best case. I could totally see, especially the way kind of we had this soft landing. Soft landings don't usually become turning points. So you had impulsive move down, sort of soft grind, spike, reversal. And, you know, in my experience, this doesn't just lead to a move up like that. You know, definitely could. But the way that this is responding now, trading again below where most of the volume is coming in. Put on the session volume just to show you. All right. So point of control sitting above us. You know, if you're above that, all right, then we're good. But I wouldn't want to, even if it's a B and it's starting to look good, I need to see we're above the point of control. All right, what we did was we're just accepting back within this gap and sort of filling that out. So it's an inefficiency. On the way down, you should see that you should get some kind of meaningful response off of it. And then this high volume node was my target for that breakdown inside day setup. So I shared an inside day setup yesterday. And really what that was we'll go to the Coinbase chart. Here's your inside day setup. That's the day that engulfs the day that follows. So your setup is from here, here, and a break below the low or below that high leads to, in a lot of cases, just the next sticky area, right? So my opinion, the next sticky area wasn't going to be necessarily just this daily low of the day that engulfed it, which would be right here. All right, in my opinion, that wasn't just going to be the target, right? I mean, there's really not much meat on the bone right there. The reason why I highlighted this blue area on Twitter, right, is because this was the low volume area and this was the high volume node that we would probably accept back into over time. If we got to break through that low, meaning I didn't think we were just going to, you know, tap on to the next daily low and that's it. Inside day setup, it's a break from balance. So what we were looking at was really not only an inside day, but inside value as well. So value area, you know, break of this low or this high leads to a pretty quick move, pretty impulsive move rather. So we had this kind of soft landing here. And again, just to give you an idea of these single prints, and I said they'll act as support on the way down. This is where I look for a long and looked for long opportunities. If we just go down to the 1 minute chart, we go back to the landing. Here's the first tap. So this entire area is that single print gap. So again, we're looking at this. All right. So the first tap, long opportunity, a lot of the times up to the next pivot, or that would be my my target. I think I pulled this one off a little bit quicker. I pay attention to the order flow. I don't really just say, okay, that this is going to lead to this. A lot of times I know I'm going to get a move at least to the more recent high, but I will be pulling positions off once I start to notice that there's any kind of exhaustion or maybe longs getting trapped up here and not really leading to much more movement or that much movement. And then the low of those single prints. So here's your low established, right? I'm not going to be looking for that one as a long again. You're looking to the next extreme. So some sort of bounce back at the next pickup in activity, which is that ledge down there. So I ended up taking about, I think it was 4 longs in this area, and all of them actually worked out perfectly. I took 2. I took 1 right here. All right. And then I took, I don't remember if I took this one or it was the next long that I took. I'd have to go through my trade history. But does anyone have any questions? By the way, I haven't been paying attention to chat. Sorry about that. Oh, so and while you guys ask questions, so about this, not sure if this is going to lead to the turn. If we're above today's point of control, it looks a lot more attractive. But then at that point, you know, if we're above today's point of control, so if we just put back on the session profiles. So this today's point of control is right around the top of that single print gap. Anywhere above, here's today's point of control. Anywhere back above here, then you look like what? You have a higher low formed. All right. You're back above today's point of control. you know, you have this B back within this prior structure, and you would likely at that point I would expect us to move back to the high of this range. But that's my trigger. I don't want to get in, you know, it's one thing to say that that trade is looking like it's setting up. It's another to really have the trigger and have all of the conditions that I think are best for my positioning. This right now is the risk for me, is that we have something like this spike further down and get a much more scary looking pullback that does lead to another squeeze upward. So my, I guess, next long criteria, and we're testing the top side of this little consolidation, but this was just a short squeeze, sort of having this drift back down. So I think we're going to break down a little bit further. But my long criteria at this point, you know, this more recent pivot, today's point of control, you have this ledge in the profile. So if we look at the TPO profile, you see that we have, and this price right here for the point of control is 35.7. So 35.7. You have this ledge. If we're able to gain support above that ledge, you know, that's above today's point of control. Looks like at that point you have maybe a higher low that's formed. Right, there's this rounding bottom, sort of progress upward rather than a series of lower highs, uninterrupted. And then, yeah, I'd probably be looking, you know, initially back at this high and then back in this gap. So, you know, from 35.7 to 36.2 area, and then onward and upward from there back to the highs. And let's see, I mean, all of these lows, by the way, so the order flow behavior that we look for, or rather that I look for, and after a violent spike down like this, it's either I'm going to act on it or I'm going to watch it and know that it's there and not take it and kick myself later. After this spike down, so first spike, second spike, third spike, just to give you an idea what those look like. So from those single prints were at 34, it was right around 34.7 and 35.4. So 35.7, 35.4. All right, so 35.4, 35.7. All right, I'm just going to go back there and show you what kind of lower time frame trap set up. All right, so this is a trend reversal chart. All right, so it's not going to be the same as your 1 minute chart. I'll put on the 1 minute to show you what it looks like. But this is the first setup back there. Whoops, don't want to move that. Leave it there. All right, so you see these. This is the tap of that low. Now, I have it filtered. So you guys would sometimes see me have the bid-ask chart where it looks like this. Okay, gotten rid of that because the problem is, and I like to change things aesthetically once in a while anyway. It's all about me seeing the information better, more clearly. So when I put on the Delta cluster, immediately I get an idea from just a cross-sectional standpoint who has been more aggressive. So it's red, so I know there are more sellers at that level. And I'm only highlighting the really high volume now. So this is the first tap of that single print. And you notice at the lows, you have a pretty substantial amount of volume that comes in. Okay. Open interest drops by about 5 million, but you can see this candle is 26 million, the delta is negative 14. So you have aggressive selling at the lows, right? That's the kind of idiotic selling that you see, right? Poor positioning, selling at the, like, you know, at the bottom of the move. After I see this occur, right? And it's not usually something that's going to be one and done. You could take this scalp from here, right? If you're just expecting a very, you know, very quick mean reversion, but it's not something you want to hold. And if you're going to build a position for, you know, a substantial throwback, right? If we're saying that this single print level is going to offer a meaningful bounce, you could look at the first trap setup and say that this might offer, you know, 50 to 100 basis point move, you're looking at a $100 to $200 throwback. But if you're looking for, a decent size move, you arguably want to see that it not only you sell it once, but you want to see that it holds, right? So again, this is just a 1 minute chart. I usually will use just the trend reversal chart so I could do away with most of these bars. Because again, if I go back to the trend reversal chart, put on something like the 120.82, I'm constantly changing the size of these depending on the volatility and the size of the rotations that are coming in. But if we zoom in here, what I want to see is that not only we sold it once, but the position really becomes solidified when we range and then attempt to puke it again. So, you have another aggressive amount of activity into the low. And a lot of the times for me, just the trigger, and the best setup is not this one right here. The best setup would be you have a low like this, you have your high volume level, you get one more puke through, big volume puke, and then the setup for me is just trading back above where that level was. Because I'm anticipating that these lows that got aggressively sold, especially if they occur on an increase in open interest, sometimes it's clear, sometimes it isn't, that they're going to lead to a squeeze upward. So that's the first test of that single print area where you have an imbalance. Here's the second one, which is a bit more imbalanced, right? You have very aggressive selling into the lows. Notice how the selling is occurring at the low of the candle. That's not trapped yet because it's still resulting in lower progress. But now you are selling, right? And then, you have a W bottom on this chart setting. You might not see it on everyone. But trading back above where that risk came in. And what's attractive is after you've done something like this, especially after the move has occurred, after a move is going upward, if you see that the selling, you have more selling come in and it's actually able to hold. Now, I wasn't holding I don't even think I was in that second bounce. I think I took the bounces that followed. I think I was playing video games, honestly. I was in between. I just have my alerts set up. This is probably the best trap setup you're going to get, though. All right. So this is the final move. This is the next move down. So this is the first visit to single prints, visit to the low of those single prints, visit again. And this is all taking place very fast. Remember that. This is probably the most attractive setup. And just for educational purposes moving forward, this is what you would want to see, right? Strong move down, ton of selling at the lows. We have 13 million traded. It's like more than 3/4 of that is negative delta. Very one-sided, all right? Very one-sided right here. Big increase in open interest. And here is this kind of setup that I take. So we have this imbalance come in, and there's a bunch of activity in here, right? You have this imbalance come in. This is your very heavy area right here. So trading above that, that puts anyone who aggressively sold this in a very poor position, right? And a lot of the times what I'm going to be doing is I'm going to be selling once I realize that the opposite side is getting offsides, right? Shorts getting trapped down here. You have aggressiveness towards these highs occurring, right? And suddenly price is now trading below where most of the activity is coming in, right? So all right, very quick, scalping opportunities. Just for a little bit of a little bit of an education on something like this. So these zero prints at the highs are not what I want to see if I am expecting price to continue upward. Now, a lot of times you will see this occur in a squeeze. You'll see multiple zero prints where price just kind of ripped through. There was no real bid. But towards the high of moves, if I see that we're turning, this means that the bid is not following up, right? This price level, for example, as we moved up, once we got above 35,629, nothing went bid. Price never went bid, right? Someone reached across the bid-ask spread and took the offer. at market, right? 162,000 contracts, 88,000, and price never went bid and never followed up. So, you know how you've seen and maybe tried to attribute meaning to this before. If you're looking at the order book on, any one of the exchanges you're looking at, and as price approaches a significant resistance, you know how the order book, the bid side just kind of zeroes out and turns to nothing? Well, you know how that makes you feel, right? It doesn't make you feel like the higher prices are really being supported. So a lot of the times that for me would be an exit signal for a long. Another good, just this entire area down here at the low is just a prime example of another trap setting up. Now it only is good when you're trading above it, right? Otherwise, people are free to sell the market and it doesn't mean that they're going to get trapped. So it's even, regardless of, someone passively sold this, right? So that right-sided volume right there against the offer, this down here, you have a ton of activity both sides. And it's the same concept at the point of control at that point. You're trading above that risk or below it. Is there a reason why I use yeah, I don't know. I don't really care for the net shorts, net long. A lot of times this kind of setup that I'm looking for, it's very low time frame. I'm looking at this and looking at delta and kind of figuring it out myself. I mean, you're getting the same kind of answer either way. So this, for example, this 17 million contract rotation, right? Negative 11 million delta open interest increase. I know that net shorts went up there, right? I know that is a net short positioning increase. That's just calculated, I'm sure, entirely off of the open interest and the delta. So, for example, if we find the opposite case, where open interest increased on right here, open interest increased, positive delta, I'm sure that this is net long positioning increasing. See how that works? So I don't really need these to be on my chart. And honestly, a lot of this stuff comes down to window space. If I put this on, then I have two of these on, whereas I could just use this and just look at delta and open interest. And then if I'm looking at a larger structure developing, I'm doing the same thing. I'm looking at whether the CVD moved down or up compared to price, right? Whether price is tracking it and what open interest is doing, which is going to show the same thing as net long and net short positioning. So you could arrive to the same conclusion and use different methods. For example, this is going to be a net increase in shorts, right? You see, just negative delta, open interest increase. It's going to be short open. It's going to be mostly shorts, right? Aggressive shorts. So here's what I think sets up just on the intraday. You have a ledge at 35.50. So I'll just put this on so you could also see. Let's get rid of this box because I know we already came there. Let's get rid of this single print. So 35.50. The ledge is basically right. That's right there. All right, and then we have the other ledge, which is just above this point of control. Okay, so long setup back, and really what you want to do is have, again, as many pieces of confluence line up as possible. And I probably want to get if I'm after a range like this, I want to get a little bit more evidence from price. So I'd rather see that not only we trade above this ledge, but the weekly open is a good one to go off of, right? And I'm not really asking you. I'm just kind of just saying that in this case, just a rhetorical question. This is what I'd rather see. Pivot above this high. Then I know, all right, so we have certain conditions underneath us that make this a bit more attractive, such as the point of control being below. We're back above that ledge. But just from an intraday setup, back above the weekly open, again, probably leading back up to this high, so 36.2. And then below this ledge, meaning if we start tracking below this ledge, and that is 35, right around again, 35.50. This excess down here, you know, you might get a response off of where it begins, 34.850. Right? So you might get something like this. But I don't think that if something pukes below here, where most of the activity is above us at that point, I don't think if we just puke below this ledge that we just get a move down to where the excess begins. So I don't think you just do something like this and then turn. I think that this probably sets up. One sec. So here's your ledge. I think if we roll from here and we fall below that, that you're probably setting up to at least the lows of today. So that's right around 34, you know, 34,560. And then if you're down at the lows today, I mean, you got some other sticky areas below you, the weekly low, next little high volume pocket, and then looking at, hold on one sec, where's this line from? This is the next really sticky area down here. And that, again, I said there are many times where within a range, and we saw this in 2019, during that range that I referenced that looks similar to this, where you'd have a really significant move off the lows, should hold all of these previous levels. It does, and it kind of just melts all the way back down. You know, you're going to get people at that point that are panicking, and it will almost engulf the entire progress upward. And then, like I said, kind of get caught at that 618. And I don't really rely too much on fibs, but like I said many times before, I will pull them out from time to time just to get an idea of, especially if we're stuck within a range and we don't really have anything that stands out, to see if there's confluence between that and areas within market structure. And sure enough, there is. Right? But if we go back just to that period that I was referencing, it's a long time ago, right? I mean, you had entire moves up. Let's move off of the lows. Drifted almost all the way back down. And let's see if that was even. So sure enough, from low to high. Whoops. There's your 618. Come on, shit. Jesus fucking Christ, the drawing tools. Excuse me. So that's, you know, I'm not writing that off. It's kind of like the same, you know, you have these, the idea is you have after a really strong move like this, revisiting that low to try to get maybe a secondary puke. That wouldn't surprise me. So it's just kind of, it's not like I'm saying that's bound to happen, but rather that's an area where I'd be looking. So just to be clear again, a lot of the times that 618 level, especially after a roll, becomes pretty significant. You know, an area that I want to focus on. When I'm not really keen on being bearish while we're within the range, especially, you know, because what I'm anticipating, I just deleted all my drawings, didn't I? One sec. I'm just going to backtrack to make sure that I have. Okay, good. When I don't think that this range is going to lead to a continuation move down, I'm kind of anticipating that those moments happen where you have bullish price action and then you have bearish price action that what I think the goal is to do is to set as many traders up to get in offside positioning before we have the sort of final squeeze upward. So that's why I'm kind of looking towards these last levels as maybe last lines of support or areas that might be good turning points to take as what might feel like a contrarian play, right? Meaning you pivoted off this low. This is a really bullish move. Why aren't we holding the highs? You know, why are we continuing to make lower highs? Now we're moving lower. You know, this has to means we're going to puke much lower. When a lot of the times that behavior sets up for, or rather that behavior continues and sets up for a much larger trap. So it is kind of contrarian because you're stepping in front of something that is essentially completely reversing, but it's not because we're still within a range, right? And if we go and look at just this higher time frame weekly structure again, you know, the value area low is 3470, and you know we've already kind of tapped that. We're in it right now, but I wouldn't be surprised if we had, and you'll see market structure guys talk about this as well. It's almost like you return back to the origin of the move before reversing. So this little consolidation leading to this move up, we get something like that almost. And that's, again, that one's beyond, but just the idea that something almost looks that bad and then turns out to be pretty good. It's just a level that we define in advance. This is the purpose of defining levels in advance. Christian Erickson. Huh. Poor low on the 19th. Yeah, maybe a poor low. Where is that? The 19th? Going all the way. This is not going to scale fast enough. Talking about all the way back here. That's, I don't know. That's not really like a, was that a poor low? That wasn't a poor low. This is definitely not a poor low. I'm looking at the 30-minute candle right now, which is going to tell me what the TPO is going to tell me, essentially. This is, you know, a lot of the times when you have a lot of excess like this, you'll revisit it and you see that it should act as support. And this is kind of going back to my initial target for that setup earlier, where you would say, all right, maybe the high of this should offer a bounce. But in this case, I don't want to say that this is necessarily that poor of a low. It's just excess. It's a big tail. It shows that the market was rejected there. Yeah, you'll likely get a revisit there. But, oh, look, as we said anyway, it's a perfect example. The visit back to that single print, you did get a visit back to that single print already. So I don't know if it's an area that I'm really focused on. Yeah, it had a lot of excess. It was, you know, an imbalanced area. You could just continue to say off of every little imbalance, the price should come and repair it, but that's not really necessarily the case. It's giving us a good idea that there was a lot of, there was a pretty significant response down there. So. But how far are we into this? I got to get ready for a barbecue. Let's just go over ETH real quick. So ETH was just getting torched against BTC recently. Still within a range, right? ETH was incredibly strong post all-time high for BTC, or what is so far. And then for the last, 4 days, or last week, excuse me, was definitely losing market share against Bitcoin, right? Everything was, though. Bitcoin dominance. I don't really look at Bitcoin dominance, but I pulled this up just to confirm it. Bitcoin dominance was increasing. ETH USD still stuck within the middle, not the middle. Still stuck within a range, though. Definitely don't want to see that it does the same thing that a lot of DeFi pairs were doing, which is continue to break down. Aave looked good for a while because it was back within a weekly range, but never found support there. So we don't want ETH to do that. But as I said, in previous streams, ETH never broke down as much as everybody else did. ETH held the last weekly consolidation, flimsy structure on the way up, but it had a series of higher closes, right? So upward progress, compression, expansion, big top. Still stuck within a range though. Didn't break down like BTC or nearly as much, and then started losing against BTC the last couple of days. You know, with ETH, I'm still sticking by the 2,900 level. At that point, it's so obvious though. I wouldn't want to get involved in the center here. It's just kind of a flat-footed area. So, not really much to say about ETH. This is going into their modification or upgrade, so we'll see. I'm sure the market was very long into that period, though. I would rather take a reclaim or play strength above, because I think with ETH, you know, there's really nothing that took place here. You know, you had that little consolidation, but it was pretty much gap down after that. So, and look, there's your anchored VWAP also. And that, what is that level from again? Oh, that's the prior weekly. That's a weekly high, excuse me. The 2,900 level. And by all means, you want to get in earlier, that's fine, but I mean, up to you, right? But I need something like this to occur for ETH. Now, some people might be getting in earlier, right? Even local market structure offers opportunities. I'm mostly trading just BTC right now. But if you break above 29, this is kind of a, there's nothing that took place here. So from 29 to 33, it's pretty uninterrupted. So, but I think that'll do it, guys. I shared the link for, so below you have the Phemex link. The competition is going to be starting in about 10 days. I'll be on vacation, but I have my stuff with me, so I'll be trading on vacation. I told my wife that I'll be working on vacation. But BTC, same old story, right? It's not bearish, it's not bullish, it's stuck within a range. You know, this is definitely not something we wanted to see, but you're going to expect that at some point. I think that the levels for the, I think that the move is to the upside. If you're just going to ask me what my opinion is, I think the move is to the upside still. Regardless of what takes place within here, I think that we're going to be testing. So just an idea of initial targets. I think your initial target is probably a big round number like 45, right? So 40K within the range, right? Outside of 40K up to 45, probably pretty swiftly. So that'll be it, guys. Thank you guys for tuning in. If you're not already subscribed, go ahead and hit the subscribe button on behalf of myself and my partner, Josh Rager, who's already on the beach at his place. Thanks for tuning in. And until next time, have a great week.